My name is David Jaffe. Welcome to the Wealth and Health Podcast, where you'll learn valuable skills and positive habits that will improve your life. This podcast originally aired as a video on my YouTube channel at youtube.com/BestStockStrategy. The Wealth and Health Podcast is brought to you by BestStockStrategy.com. The wheel strategy, pros and cons. In this video, we are going to discuss the pros and cons of the options trading wheel strategy, and we're going to learn whether it's right for you. Stay tuned. So what is the wheel strategy? The wheel strategy is when you sell an out-of-the-money put. If that put option ends up getting challenged, you take assignment of that stock and then you sell out-of-the-money call options. Then if that call option becomes in the money, the long stock and the long shares will get called away from you. Therefore, it'll close out the position. So again, you'll sell an out-of-the-money put. That position will become in the money. Then after you get assigned, you'll sell an out-of-the-money call, and then you'll continuously sell out-of-the-money calls until that position gets called away from you. What are the pros of the wheel strategy? The first pro is that it's relatively low risk. It's low risk because you're selling an out-of-the-money put option, so the stock would have to fall below its current market price. Then you're further reducing your risk by selling out-of-the-money call options to reduce your basis and collect more premium. The second advantage of the wheel strategy is that it provides you with a win rate that's over 50%. Having a relatively high win rate is very important if your goal is to be a successful and profitable trader. Another advantage is that you can actually participate in the upside of the stock because you are going to be assigned the shares. This works out extremely well if a stock is oversold and then begins going up again, because by being long the shares, you're able to participate in the upside. The final major advantage of the wheel strategy, which I have not heard mentioned before, is that when you're long stock, you are not going to be negatively affected by the volatility expansion that is inherent in options during a large sell-off. As a result, if you sell a relatively far out of the money put option and it gets assigned to you, you're not going to have to deal with the buying power reduction that's inherent during a large volatility expansion event because equities do not have a volatility component. Now that we touched upon some of the advantages of the wheel strategy, what are some of the disadvantages? The first disadvantage is that the wheel strategy is not capital efficient because it is not capital efficient to own stock. The second disadvantage is that it has a lower win rate than selling out of the money put options and rolling and managing the position as opposed to taking ownership of the stock. Yes, your win rate when you run the wheel is going to be over 50%, but when you sell an out of the money put option or an out of the money call option, your win rate can easily be over 95%. So maybe your win rate on the wheel strategy will be around 60 to 65%. However, your win rate when you sell an out of the money put option can be over 95%. The third disadvantage is that your upside participation for owning the stock is capped by your strike price selection for the call option that you're selling. As a result, you're not able to fully realize the upside potential of the stock that might be oversold because it's going to be capped by the call option that you sell. The fourth disadvantage of the wheel strategy, which builds off the first disadvantage, is that the buying power reduction for stocks is around 50% when you use Regulation T. But the buying power reduction when you sell out of the money put options is only around 15 or 20%. As a result, the amount of buying power that you're going to use by being long stock can be about 2.5 to 3 times more than it'll be when you sell an out of the money put option. And the final disadvantage to running the wheel strategy is that during a prolonged bear market, you're going to lose dollar for dollar by being long stock, as opposed to when you sell options. Because when you sell options, you can actually roll down the strike price by about $5 or $10 just by rolling it out in time, and it's only going to end up costing you around $1 or $2 in order to realize an incremental $5 or $10 of reduction in strike price to your put option. And that $1 or $2 that it's going to actually be costing you can actually be easily recaptured by simply rolling it out in time. So you can use the time premium and then allocate that time premium to decrease the strike price on your put option by about $5 or $10. You don't realize that benefit when running the wheel strategy, because for every dollar that the stock decreases in value when you're long shares, you are going to experience a $100 decrease in your net liquidation value for every contract that you sold. Because remember, one contract represents 100 shares of stock. So if you go long that stock and then that stock decreases by $1, then your net liquidation value is going to decrease by $100 or the full extent of the decline in that underlying stock. However, as stated previously, if you're selling options, you can reduce that strike price by about $5 or $10 simply by rolling forward that option in time, and simultaneously it'll be a more efficient transaction because being short the options will use up about 2.5 times to 3 times less buying power than being long the stock. And one of the problems of running the wheel strategy in a bear market is that you're going to end up taking assignment of a lot of stocks, which is going to end up using a lot of your buying power. And the amount of premium that you're going to collect by selling the call options is not even going to be close to the amount of losses that you're going to suffer in a bear market by being long all those shares of stock. To summarize, I believe that the wheel strategy is pretty good. It provides you with a relatively high win rate of about 60 to 65%. However, I do not use the wheel strategy, and the reason I don't use it is that taking ownership of stock is not capital efficient. Additionally, during a bear market, you are going to lose a lot of money by running the wheel strategy because the losses that you're going to suffer during a protracted bear market is not going to be able to be offset by selling call options. Additionally, when you roll options, you're able to realize a significant decrease and a significant advantage to your strike price by simply using the premium that you would receive from rolling it forward in time and then allocating that time premium towards your strike price to decrease the put option by about $5 or $10. So you can decrease the put option by $5 or $10 and only pay about $2, and then you can finance that $2 by simply rolling forward that option by a few weeks out in time. However, if you're running the wheel strategy, then you don't have that advantage, and for every dollar that the underlying stock falls, you're going to realize a relatively significant decrease in your overall P&L. David Jaffe with BestStockStrategy.com. These are just my thoughts on the wheel strategy. I definitely think that it's a worthwhile strategy for people to implement. I think that it's relatively safe. It's not something that I incorporate into my portfolio, but I don't think that it's bad at all. I definitely think that it has a high win rate, and I think that it's pretty good. But I do believe that because of the likelihood of you sustaining large losses during a bear market and the fact that it uses up significantly more buying power than when you're selling options, is just simply not a strategy that I incorporate into my trading. Please like, comment, share, and subscribe to this channel. Click the notification bell and let me know your thoughts below on the wheel strategy and whether you implement it in your own trading strategy. Visit BestStockStrategy.com and submit your email address to receive valuable free training. Please give this podcast a positive rating and review. If you have any questions, visit BestStockStrategy.com and send me a message.